Welcome back, everybody. How are we all doing on this fine Monday? Can we just get an audio check? Make sure the audio is good. Everything looks good this side. I believe we should be good as far as the link for the stream because I posted that ahead of time. Let me just check that. Let me just see. Looks good. Okay, so we're looking at the US 100 here on a daily chart. We traded down into this equal low, into this weekly fair value gap. As far as the seasonal tendency, we do have a lower NAS, lower sideways consolidation profile. So I'm not expecting much for these 2 weeks. We might get some pretty good day trading slash session trading, scalping types of setups. I want to go over to the dollar index, just look at the dollar index with you, and then we can quickly do an analysis on these charts. Dollar index, we cleared these equal lows, daily relative equal lows here, and we have been trading higher last week, Thursday, Friday, and not much for today. So not much to see there. Back to US 100. Thursday traded out lower, Friday lower, and for today we are getting this retrace up higher. Looking at this, I still see this as a relative equal low. We have yet to go below this low and that low. So I still see this as a relative equal low. And I'm still expecting a push lower into this daily fair value gap, which would coincide with this weekly fair value gap consequent encroachment. So I still want to see some lower prices, which that aligns with that seasonal tendency, giving a lower move, lower consolidated move. So that still is in alignment with that. Get rid of some of these unnecessary drawings on the lower time frames. Not much to see here other than the fact that we traded from this gap Thursday and we just traded down into this lower weekly gap. We were basically stuck between two gaps. Not much to see there. Let's take it on into a lower time frame. I see a relative equal high up here. So we'll take note of this. Relative equal high. So that is something that I will look for. If we do want to go up higher, then it's going to clear out this high and then most probably fill in this inefficiency and maybe tap into this daily fair value gaps low, and then we might see that move now lower. Take it down to a 1 hour chart. We have low high, lower low here, so this would be a breaker block. But these highs are too clean here. To me, these are equal highs. So that kind of conflicts with the bias I have of want to be short here on this. And we also have another equal high up here as well. So that does conflict with that idea of wanting to be short on this. So that makes you got to be cautious. You got to be careful when you have equal highs and equal lows on both sides, which we now do have. You got to be really careful when you get these types of conditions here. Not much to see on the hourly chart than other than these equal highs and those equal highs above there. We do have a fair value gap in here, which I would probably take note of that. See how we traded around this level on a lower time frame. Working it down into a 15. Let's look at overnight. Overnight, we opened up. Where was it? Sunday, right around here. We opened up, we traded higher. So we had a gap higher. Opened up, traded back into this gap, off lower, off higher, I mean. Retrace basically into this, filling this inefficiency. Going higher, clearing the high. Coming back into order block, trading off higher, coming back into order block, clearing the low. Notice the candle's body here closes higher than these ones. Pushing off higher through the high, probably going to target these highs and this high here, which it's done that now. So it seems like we are bullish. So far, everything looks to be bullish. And then we had this trade back into this high of this fair value gap on the 1 hour chart. Everything here points to bullish prices. I like this inefficiency here. We're sitting inside that. I would probably take this one and extend this one through. We're sitting just above the consequent encroachment of this. I would use that as a filter to kind of give us a extra confluence on the bias. But these equal highs are going to be my targets for sure. I would definitely be long here with these equal highs and these equal highs up here. So looking at that, I want to be long. Definitely looking to be long. Looking down at a 5-minute chart, not much to see here. We did trade into this 5-minute fair value gap, really small gap here. Gonna have to size this up. 5-minute fair value gap. Let's make this one a green gap just to get it to stand out. 1-minute chart. We traded into this gap here as well, which coincides with the 5-minute higher time frame gap. Nothing here that would get me excited, to be honest. We traded into this lower gap down here, and from there we have been trading higher. Ever since open, we've been trading higher. So another thing to keep in mind would be that everybody that got involved in this move higher, these guys are still in a profit because we've not seen any stop hunts. The only stop hunts we had was here. We had a stop on here below this low, which anybody that was long initially and that expected this high and that high to be cleared with a stop below this low got taken out there. So we had that stop on going, but it's still been going higher and pushing higher without taking any short term lows out of the marketplace. So that's something else to keep in mind. But for draw, my draw on liquidity would be higher for sure. So I'm definitely expecting higher prices. This fair value gap here would be a possible trade entry to go long. Not a bad entry, although it's not the type of structure that I like to see. I like to see price coming to that higher time frame PD array and then give me a clean structure in there. So let's look at this one. 836. 836. We would still have the 820 to 840. So this would still be inside that macro. Although it's not the cleanest, it's not the best setup. I probably would have preferred this setup to form above the consequent encroachment of this very hard time frame fair value gap here. That would have been a more ideal scenario just to give us that extra confluence of price being above that consequent encroachment. We do have an order block over here. So let's look at the order block. We're going to have to look at this mean threshold over here. Going to have to eyeball this one down. Look at the mean threshold, see how price reacts. And let's expect our prices. While we wait for this setup to play out, you can open up this one on your screen. We're going to take a look at the dollar index and get a quick analysis on that. For dollar index, we traded these equal lows. We did clear these lows. We still have this relative equal low on the board down there. We still have that one in play. This old low would still be in play, coupled with this fair value gap. Still in play if price does want to go there. Although the dollar index, with its seasonal tendency, does show sideways price action, sideways, slightly higher price action. To clean this stuff up. We still have this daily inversion that would still be valid, just extend that through. We do have this old high over here, so I would take note of that. Look at the highs. Let's give this blue. And then we do have this fair value gap here, which I'm not going to take note of because that does coincide with this inversion we have. Extend this through. We did have a balanced price range in here. We had this one. This would be one as well. These are also gonna be breakaway gaps because we're not coming back into these. So ideally, you would want to see them stay open and price. These are relative equal highs here, so I do want to see dollar trade higher as well, which that is something that ideally you don't want to see dollar trading with your indices or with your choice of market. Dollar should generally be opposing your trading idea. These are 4 hour equal highs. Gonna leave these in blue so that they coincide. So I do want to see dollar trade up higher. We can have these cleared targets. We have this fair value gap here. That's something you would look for. Ultimately, these highs over here, if it does want to trade up into those. We have this fair value gap here, which we traded into. Price traded into this fair value gap here. Send it higher. So I'll just take note of this one. That was the higher underlying higher time frame. PDRA, 1 hour fair value gap. That is what sent price to go higher. Also, like this imbalance over here to use as a potential inversion and to see how price reacts once it trades above this level. If it wants to stay above that level, then that would automatically give you a confirmation on your directional bias. That's just going to be an inversion. Although what's starting to happen here is we have this 1 hour fair value gap and we have this daily inversion here. So we want to see price push higher. We don't want to end up getting stuck in here and just consolidate. That would not be something that you would want to see. We would want to see this push up higher. So something you have to keep in mind with dollar pushing up higher along with the indices is the fact that you're probably going to get high resistance liquidity runs just because dollar would usually come in and it would be the fuel on the fire, and that would give you that low resistance liquidity run if dollar trades against your the market that you trade. That would be fuel in the fire and that would push price to its target. So if they trade along, then that is something that you need to look for. That is a sign of high resistance liquidity run. So these are the levels that I would look at with dollar index. Looking at where we opened up, not much to see here. We had a slight gap here. Slight gap down, traded down lower, took this low. So everybody that was long got taken out. They got induced to take shorts. Stops would be above this high probably if they were going short. Retraced in, back into this gap. Traded down lower, failed to take the low. Back into this 1 hour fair value gap. Failed to take the low, so that would be trading into an order block there. Closed off higher. Cleared out equal lows. So everybody that was short probably moved their stops down to this low. Those got cleared now. So you would still have liquidity resting above this high here. So I would be looking for prices to go up higher on dollar index, as well as these relative equal highs, which are in close proximity. So I'd be looking at those, seeing if we can get up into those. So far, this is not looking ideal for US 100, trading below this 5-minute fair value gap. The order block would now be lost as a support. If we were to trade down lower, which not ideal, but then again, like I said, we do have this price action trading up higher, 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 higher without taking a lot of short-term lows. This would act as a breaker block. And this would be close to an entry there. And then you would look to take your 5 handles, which could be down here. So let's go in. Let's tape read this. Let's see if they pushed down lower. Keep in mind that it's 850, so you're looking at the 859 in macro. Let's look at stop loss placement. You have breaker block. We have that 5-minute fair value gap, and we have an order block in here. These string of up close candles. If we're gonna look at a stop would be safe to place right about that high. If you wanna incorporate your three PD arrays, which you got this fair value gap, breaker block, and you have this order block here. So that is a safe stop, and we will look to target 5 handles, which would be here. That would be something that you would look at, and you would be targeting this low, and ideally you would want to see price get below those lows here, but you are targeting this, and this would be where you would take a partial. So this would now be an order block. You would look at this to get inverted. Price can invert this, get below that, use that as a resistance to push it down lower. Order block. Look at the order block. And all you're doing now is, if, for instance, you got into this, you would just be looking at managing the setup. So we're looking at this as if we were in this position. We saw the breaker block. Now, this would be a better scenario because we have a clean structure up here. We're inside the higher time frame PD array. We are below the 50% consequent encroachment. That's ideal. We have another higher time frame PD array lining up with the breaker block, as well as this imbalance. However, we would want to see price straight through this. And at the moment, this is acting as a support. Not ideal trading conditions. Reason for that, we still have equal highs here. Equal highs here. They are way too clean. So you have to be very cautious of this. Be very aware of the fact that you probably could take a stop out if you take a setup like this. This is not an A plus setup. This would probably be a C, class C setup, because of the fact that equal highs, equal lows, that is the number one characteristic of a low probability scenario. When you have equal highs and equal lows and you can frame both sides of the marketplace, that is the number one factor that you have low probability conditions. And that is exactly how ICT sees these conditions here. So while we still have this trade playing out, I do really quickly want to go over. You can just follow along with that on your screen. Let's quickly go over to the ES, and let's get a analysis going on that. Okay, you should be looking at ES or US 500. Not very much to see here. We traded into this daily fair value gap. We have two of them here. This one as well as this one. Shade them down lower. Shade them lighter. Lighter. Okay, good. For this case, I'm going to look at both of them because they both would be of relevance. And we'll see why on a lower time frame that might come into play. So there's your daily inversions. Not much to see. We do have a fair value gap up here, which we could take note of that. So for US 100 is rejecting that fair value gap, that imbalance that we took note of now. That has now traded through. So we want to stay below that. So we do have this daily fair value gap here. We're retesting that fair value gap. We did get a candle close below that. We tested it. Seems like we are rejecting that. Just going to switch the screen over to show you real quick what I'm looking at over here. US 100. See that? I'm looking at this low. We still have this fair value gap here. We traded into that. We rejected that. So far, this looks good. It's typical Monday price action where it's slow movement. You can see this is high resistance liquidity runs because we are not moving anywhere fast. It's really slow, really dribbly. But so far, we are still respecting here. What I would do here is we have this order block, fair value gap, breaker block. The stop would be moving down here. We have this order. Everything comes together here. We have order block, breaker block, fair value gap. I think it'd be safe to say we can do a mean threshold of the order block, just above a mean threshold of this order block. Just get that stop pulled in because we know it's low probability. You don't want to be risking too much money on that. You want to be preserving your capital. So that's how you would manage that position. So let's switch back to the US 500 and let's do the analysis. And that just follow along on your screen on that trade, on that idea. So we got that daily fair value gap, go down to a 4-hour, and just looking at the US 100, probably going to hit the stop there anyway. We traded back above that. Not good at all. Not good. The stop will probably be hit on that position. But in any case, with that one, we are not going to, we wouldn't be taking it off. We already narrowed down the stop. So in that case, you wouldn't be looking to take something off because you narrowed the whole stop. So far, still in the trade, we were back above that 5-minute fair value gap, rejecting heavily, pushing back down lower. So let's continue on with the analysis on ES. So ES, we had a 4-hour fair value gap here. You want to take note of that. It's in close proximity. So take note of that. That will become an inversion now. We are above that anyways. Inversion. Down to the 1-hour. You see we're above this. Let me just pull these back in a little bit. We're above that 4-hour inversion now here. We have these equal highs here and these ones there too as well. So we have that exact same opposing idea on ES where we have equal highs. So that opposes that trading idea. So it's a low probability trade. 1-hour equal high. Let's add some color for differentiation. Let's just make that red. So we still have that. As far as a 15, not much here, not much at all. I would look at these two up close candles as order blocks. They traded into this fair value gap here, and we traded up higher. Nothing else that pulls my attention here. So probably mark those. 15-minute order block. And we can just do a green. Pull these in. So that would be what I would be looking at over here. And I would just glance over a 5, glance over at the 5, and see what's going on here. Not much to see here as well. Order block here. Nothing else I would take note of. Might take note of this fair value gap. I like using these fair value gaps as filters to give you directional bias when we have low probability conditions. Not much going on here. We have equal lows here, equal lows there, old low over here. Coupled with this one makes it relative equal low. So we can clearly see that we have on ES and as we have these relative equal highs as well as relative equal lows that are in play. So it's a 50-50 market here. So not expecting much. So let's go back to the, not much has happened here. We're basically sitting in a consolidation. This order block would now be invalidated. Breaker block is there. So the breaker block that still stays in play. And there's your stop on that. All right. So if you were in this position per se, and you are tape reading, how you would journal this is you would take your screenshots and you would take note of the fact that you have relative equal highs above the market. The fact that we ran higher. Since open, we ran higher. We only took the stops here. We didn't take any of these guys that got long here are still in a profit. No, none of them got taken out because no short-term lows got taken out. So you're able to frame both sides of the market. You also have these relative equal lows as well as this old low and these equal lows down here. And then we still have daily equal lows. You can couple that with the seasonal tendency that we have, where we also want to see prices trading in a high resistance lower. So that will be things that you would write down with a screenshot with this particular setup. That's how you would journal that, and you would give it a note or put a title of this, and per se something like 50-50 market conditions, equal highs and equal lows, both sides of the market can be framed. And that's a low probability. That's a number one sign of stay out of the marketplace because both sides can be framed. So it's low probability. You're probably going to take a trade and it's going to be something like this, or you're going to end up taking a trade and it's going to be high resistance liquidity run until price gets to your target. So it's not going to be a good time. Something else you want to take note of is the fact that dollar was trading with the indices. So that keeps indices from moving freely. No fuel on the fire here. So you want to look for dollar trading now lower, indices going higher. Ideally, when the market is in a condition like this where you can frame both sides, ideally you want to see the market either take the lows and then give you something to go long, or take the longs and give you something to go short. So it's either going to take those lows and give you something to go long, or it's going to take these highs and give you a setup to short off. And you're going to have to sit and wait until you see one of those happen. And then you have a clean setup on your hands if dollar opposes your directional direction, and then if your indices are trading along with one another. You're going to keep those ideas in mind. So far here, we traded back. We haven't traded back into this 5 minutes, but we did trade back into this fair value gap here. So I'm going to take this off the chart now because it's no longer relevant. Equal lows are still relevant. To me here, I wouldn't be touching this. We still have equal lows here. We still have equal highs above this. So this is just where you're not able to take any trades here. That should be one of your hard set in stone rules. If you have equal highs and equal lows in the market, you have to wait until one or the other side gets cleared, and then a clear setup will form. And then you can look to engage. Just glancing over Dow here. You guys can do that on your own. Just glancing over here, not much to see here. We're really stuck in the sideways range on the 4 hour. We have not cleared its highs. 4 hours still has relative equal highs. They're in this range. Same thing seen on a 1 hour chart. I can see equal lows as well on the 1 hour. 15, stuck in a range. Nothing interesting to see at all. We have been trading lower on the 1 minute though. So that's something to take note of. So nothing here that I would be interested in. Nothing is clear here and one-sided. Even though we have those relative equal highs, it's not clean. Hold on here. Oh yeah, this relative equal high. Why did I say that is a relative equal high? It's not a relative equal high. This would be a 15-minute inversion. We have 4 hour relative equal high here. But you can see them on the 15 as well. I just like to leave the higher time frame. I just like to leave it like that. Higher time frame is always king. Above the your lower time frames. So I just like to leave it if it's a 4 hour equal high or something. I like to leave that. So dollar is now opposing. We're trading now lower on dollar. So we do want to see it reach for the high. Nothing clean on ES. We did trade above that 15 inversion. Sitting above that. NASDAQ is clearly the leader here. Pulling higher, pushing higher. Seems like ES is following, and it seems like Dow is following behind ES. So ES would be the sixth sister in this case. Following along. Nothing much to see now. You're not inside of a macro 911. You're going to wait for 930. Wait for that macro to come in. And you have to see what price action gives you around the time of the macro. If there is something clean in price, then you can execute off that. Only if one of the two sides have been cleared here. We're still looking at these equal highs, and we still have relative equal lows on lower time frames, as well as the idea of seasonal tendency pushing us lower. So we still have these lows here in place. You gotta be patient here, guys. Gotta wait. Need to wait for one side to be taken out here before we could get a setup. Ideally, I would love to see price take these equal lows, and then I would look to go long, and I would look for these relative equal highs to get taken out. Even though I would then be opposing the seasonal tendency, that would be probably for me, that would be the setup I would prefer, because we have those equal highs in place. So I would prefer that to happen. And even then, if that does happen, then you would still have to take that position with a lower risk, just because you are opposing the higher time frame draw on liquidity with those equal lows still in place, as well as the seasonal tendency. So you gotta be careful. Really gotta be careful. Gotta preserve your capital and be careful. We also don't have any news today, by the way. Let's just flip over to the calendar here. Let me just flip that over. Calendar here, we don't have anything for today. For tomorrow, we have 10 a.m. Nothing exciting. Wednesday, 9:45 and 10 a.m. So I would probably be looking at the 9:30, 9:50 here. Thursday, we have 8:30 advanced GDP, unemployment claims. Those are not too interesting though. So I would probably sit and just see what structure is in play before we get into 8:30. If there is something, then I would take that. If not, then I would look at the 9:30, 9:50. For Friday, I would look at the 8:30, and then probably if there is nothing, then I would glance at the 9:30, 9:50. Just because again here we have core PC, it's not nothing major. Even though we have red folders, these are not anything major. So you got to look at the structure that's in play, and you will know with experience if there's going to be a setup, or if there's not going to be a setup. Like right now, there's not any setup here. Over here, I would probably view this low high and this lower low. I would probably view that as a potential breaker block. This one down here is not the cleanest one. I would prefer this one, low high, lower low. This one, low high, lower low, would probably be valid as well. But we didn't really trade back into that again. So this one here would probably be preferred. And even then, we still did not trade back into that. So nothing really interesting. Fair value gap. We can just get rid of this now because we're not looking at that anymore. Breaker, get rid of that. This 5 minute, I would keep this in play. So that filters, we traded above that. We stayed above it. We moved away impulsively. So that would set the stage for a more potential bullish move. Nothing is certain though until we get to the 9:30. Nothing is certain until then, even though we have this fair value gap here, as well as the breaker block. We also have a imbalance over here. Another one here coupled with an order block. Nothing is certain here. Nothing clean over here. Nothing clean. Even if we do trade back into this, I would still not prefer to take anything along. We're trading lower on all the indices. Dollar is sitting sideways now, sitting inside that 1 hour inversion that we took note of, sitting right at the consequent encroachment. Nothing interesting there. I won't look at this fair value gap here. I just won't look at that. I would prefer if it does want to trade that and go higher to come back in here. Maybe clear this low out, then go higher. Everyone that was in a long got taken out below this low. But we left equal lows here. So this is not, I do not prefer to see those equal lows in play as well as those equal highs. I just wouldn't touch it at this point. Just gotta wait patiently for this, for it here to clean up before we can touch this. Let's wait for the 920, 930 opening here. And let's see what, if price can clear one or the other side. So if we're not interesting at all, nothing clean, nothing good. Nothing that would have me feel excited about anything here. We'll look at the 930 opening and see what they give us here. What 930 does if we can clear, if we can get up to these highs or even these lows. It's not a long ways to get up to these highs anymore. We have 17%. So that's not a lot. If 930, if they really want to get up there, they could easily jump, get up there in with the 930 opening. They could easily get up there and snag those and take them out. I have to wait and see for those. I think we'll see what happens at the 930 opening. And then probably 950, 950 to 1010 is probably going to give something. Usually cleans up around that time. Not always though. But 930 could be them cleaning it up, and then 950 could be stepping into play with a potential setup to set the stage. If not 950, then maybe look at the, maybe look around, so through the silver bullet 10 to 11, see if you get something at the 1050 to 1110. So it seems like we're holding this small fair value gap. We're holding on to this, sitting inside of the order block. So let's keep an eye on this. Dollar seems to be trading now lower, and everything else is pushing up higher along with Nas. $9.22. We still have 8 minutes here before we get to 9:30. Nothing interesting here. It would be nice if they tanked it down into this fair value gap here, going into this breaker block here. Couple that with this fair value gap and these order blocks. That would be nice below this low. That'd be something nice to see if they can clean that out. We are working with very small ranges here. Very, very small. Just want to glance over to dollar index. See, this looks like a market maker buy model here. We took out these highs back inside the gap below 50% of this consequent encroachment here, this 1 hour inversion. We have all this down here with these equal lows here. So I think they want to push dollar down. They want to keep dollar down, then we're going to go for this buy model here and go for these highs. And we also have these ones. If they really want to go, then we could easily clear these highs, go into this fair value gap here, and we still have liquidity above there as well. It really just depends on how far they want to take this. Let's see, that is about, yeah, that's about 100. Yeah. If they really want to go, they're going to go above these highs inside these fair value gaps here. Maybe they want to take those highs too. If they really want to go, that's where they will take it though. So, okay, this fair value gap has supported price. We're taking off 922. I just wouldn't get involved in this at all. Just because of the fact that we have those equal lows still in play. To me, that makes the whole scenario a low probability scenario. So that's like it's low probability, so there is no trade forward unless we get out of the low probability market conditions. And you really have to be strict with your rules. If you're not going to be strict with your rules, then you're not going to get consistent. If you're not going to be strict with your rules, some rules are just set in stone and that's it. If price does not give that to you, then you're just simply not going to take a trade. Let's look at this fair value gap here. Let's see if we can reject this one, and let's see if we can get a move up higher from this. Let's tape read this. See if it does reject 925. We're inside that macro. Let's see how if we can get a rejection from this fair value gap. And we should see that push higher. US 30 still pushing higher. No clear rejection here. Nothing clear yet. We could tap into this 15-minute inversion high before we reject. So let's see how it plays out. Still no rejection. We have 30 seconds before they the close of this candle. Just extend this stuff through. Seems like we're acting as a brick wall over here. If we did take a long, we would have this fair value gap, this one, and this order block. No rejection. Your stop would have to be below there. And I'm just looking at the high. So that's a 13 point or a 0.07% stop. So 13.9. No rejection. So that means no entry. Now you look at these levels to see if you get any support and these levels here. We could still trade below this. We still have that breaker block in play. Still have this imbalance here as well. So there we have a rejection. So that would pose an entry. Stop would be below here. Target would be, let's move this over, 12% for 5 handles. So let's tape read this and see if we can get 5 handles from this. Remember, it's low probability conditions. We could still see a stop out. This would be an order block. Look to see if we get support at the order block. Look to see if we get support at the consequent encroachment. So 0.05 on a stop here. That's not too bad. Man, reasonable stop there with your 3 PD arrays. I would like to see a close above this 15 inversion consequent encroachment. Okay, beautiful. We got that close. 929. We'll just have to see if they want to stay above here and keep pushing higher on this here. We do have US 30 really pushing up higher. There we go. That's a nice reaction. Want to see it keep pushing higher, reach for each relative equal highs. Dollar is trading a lot, trading in a consolidation, not much to see. So I'm not going to look at dollar for now. With us trading up higher here, still pushing higher. 929, almost 930 opening. If it wants to get up there, 930 opening should push us higher. Stop. We have order block, 15 inversion. We can put the stop right below there just for safekeeping. It's probably going to hit the stop. There you go. Stop would be hit. So that would just stop you out. But the possibility would still remain that they could probably take this down lower. So that's why I pulled that stop up, reduce that risk if it does want it to trade against us, which we're trading against it now. So this is low probability conditions for you. Trading low probability conditions. Looking at a 50-50 marketplace. We're going to target these lows now. So when you open up a market or a chart and you have conditions like this going in, it's really, really difficult to get into that position and have that high probability one-sided setup. You're going to need to wait until they clear one or the other side out, and then you will get a setup. In this case, we have now taken these lows out. So that would set a potential stage for you to be able to go long. Just have to wait for them to give you that really clean setup, that clean structure behind it. Let's watch this fair value gap. By the way, this would be another perfect example if you were tape reading this. You just look at the setup and you list all the reasons why this setup is low probability. You take note of all those reasons and you keep that in mind. So that would be something that you would put in your journal when you're tape reading in conditions like this. And you would specifically take note of those things and give it a nice title so that when you go back into your journal and you reflect on those things, look at this wick here, pushing it down lower for these lows now. There you go. There's all those lows. So now one side has been cleared. Probably going to go for these two if they really want to go for it. Everybody that was long now has been taken out. We have shorts induced. So this still sets the stage. We could potentially still go up here and clear these highs out, which would now become one-sided. So that's what I was talking about when I was talking about waiting for that one-sidedness to come into play. Gotta wait for that one-sidedness to come into play here. And then you could look for a setup. It'd be really nice if they would, I want to say, go into a higher time frame PDA, right? That's why I'm moving up to a 15 here. So now we would have this 15 order block. So we take note of that. Let's make it purple, 15-minute order block. Over here, coupled with a small fair value gap. Important to take note of that as well. So there's that 15 order block. Let's get rid of all these lows. Let's get rid of those. Let's get rid of this. I'll get rid of this one, that one. Get rid of this. So we didn't want to get rid of that. Get rid of this. We trade into this 15 fair value gap. You have imbalances here as well. Rejected, traded into the wick. Rejected, tapped into the low of this 15 inversion, traded down into and cleared these lows. So I'm keeping these two levels on the charts. So that sets the stage for higher prices to come into play. Let's look at this inversion and see if we could get a rejection and go higher. If this was a hypothetical tape reading session, then your rules would still apply. You would still apply all the rules that you listed down in your model here. So in this example, we did take two losses. So if two losses are your limit, then that would be where you would stop tape reading. You would still apply the same rules and you would stop tape reading. And that sets your foundation to following your rules. Okay, so we have a volume imbalance there if it wants to go down there again. Not seeing it go back down there again. We have another volume imbalance right here. Right there. So far, there's still wouldn't be an entry to go long here. At least not for me. Maybe if you like volume imbalances and you easily spot them, then maybe this would have been your entry for a volume imbalance. ICT sees them as you got to be flexible on them. It's one of his most, you got to be lenient on it. It's one of his most flexible PDRAs. You got to give some room for give and take around this uh, volume imbalance. Getting rid of this one. Small gap in here. Acted as a breakaway gap. Still no entry here. Still nothing to get excited about. Dollar is still trading out lower, and indices are all in sync. So that's looking good. Let's take a look at the higher time frame here. We still have that high there. See that? Still got that high. There would still be no entry here for me. Nothing to get excited about. We do have fair value gap here, overlapping here. Of that, it would be nice if it would come back into this before it wants to go to the target here. That would be really nice if they not going to give it to us, unfortunately, in this one. But if per se it hung around here, traded back into this, and that would be a potential fair value gap entry to go long. It's at the consequent encroachment. It's you have this imbalance here. It's inside that 15 inversion. It's in the upper range of that 15 inversion. So that would be a nice entry to go long here. Volume imbalance traders today got the entry down there. So see how they traded both sides of the marketplace? Both sides were traded. We have a fair value gap here. Just going to note this in the same gray that we have down there. 15 fair value gap. That would be the next target. You have this fair value gap. You have this fair value gap. BPR because they extend through with another fair value gap to the left. So they would both be BPRs. Be nice to see it trade into this one. Leave this one open as a breakaway and then push higher. If it does get into this, we get a rejection. We can tape read that setup. Low, high, lower, low. This would be a breaker block here too. We did clear a lot of liquidity. Let's make the breaker block blue. Let's see. See, be an interesting one. This, I'm just going to disregard this, disregard that. See how this candle closes though. Really want to see something in here though. Nothing yet. If you did take an entry around this area, see that stop is going to be pretty hefty here if you did take an entry in that. We're going to trade into this, even though still that stop would be pretty hefty here. If we can get an entry in there, that'd be pretty good. See if what we can do over here. Still no rejection here, so no entry. See, I didn't want to see this get traded into here. I wanted to see this remain open as a breakaway gap here. See that rejection there. Still want to see that candle close. So that would probably right there would pose as an entry. And then the stop would have to go variable gap. You're going to have to look at placing the stop down here with a take profit of at least 5 handles. Would be there. So that's going to be a 1-to-1. Let's look at that. If you took that potential entry, maybe that would be a clean structure. We took the lows out. So we only have those equal highs left. So this would be your best case scenario. All indices are trading in sync. Dollar is trading lower. So that would be your best case scenario. Still in these high resistance liquidity run conditions here. This is still left open here, this breakaway. So this would still act as a breakaway. Don't want to see that get traded into. I would love to see that stay open. Order block here. Order block. We still have the 15-minute inversion. See, this is what I don't like here. They can trade into this. It's permissible. They can even trade down into this one, although that's not what I want to see here. The stop here should be exactly below that breakaway. If it does stay open breakaway gap, it'll act as a breakaway gap. Rejected it. Order block did not hold support. See, we took an entry right at that 940, right at 941 about. It would still be permissible. You're inside the right inside that macro. It's moving up higher. It's still inside this range here on the 1 minute. US 30 is trading now lower now. Dollar is just sitting down in a consolidation, trading slightly lower. US 30. I don't like the fact that US 30 is opposing us here, but that shouldn't be an issue here. I would tighten the stop here, put it below the favorable gap, and there is your 5 handles. So you would take something off here, put yourself something. Ben Cruz, I got an entry on 1 minute inversion on the ES. 10 points trailed stop tight, 55.90.25 long to 5600.25. Nice. So if you're trading multiples, you would take something off at the 5 handles, take something off above here. That's how you tape read, guys. You gotta practice this stuff. Practice it. Let's make that orange. Okay, so there you go. Second partial would come off. And then you would be holding for this inversion. You would be going for that inversion up there. See, pushing up really nicely now. This is now low resistance liquidity run. Large candles pushing up higher. Don't like the fact that dollar is trading up slightly higher, still sitting in a consolidation though, and the fact that US 30 is opposing us here. So there'll be two partials at this point. You would put the stop with commissions and fees covered in. Let's see how much this is over here. So that would be about 27% still. Look to take something off as soon as you hit that 15 fair value gap. That's a nice place to take another portion of meat off of the bone. Beautiful. Beautiful. You're going to take close the whole thing right there. Bam. There you go. That's where you would close that position out. So now you go in, and if you were tape reading this, then you would go in and you would take note that we cleared all those equal lows that were on the 1 minute. We took out these guys down here, those guys. So that 50-50 was taken out, and we only had these equal highs. We only had these equal highs left in play here. So that becomes a higher probability because we have a one-sided marketplace. Even though we would be opposing the daily with those relative equal lows as well as the seasonal tendency, that would still be intraday intra session liquidity that you're trading. You're just gotta be patient. You gotta wait for that setup to come and it'll form. It really cleans up a lot after 9:30, sometimes after 9:50. Not always, but I've seen it clean up a lot during those macros, especially if we get a consolidation around the 8:30 macro. It just tends to clean up just after the 9:30. It tends to clean up in that macro. So sometimes you would be looking at the 9:50. If you're getting a consolidation in 8:30, if you're getting nothing in 9:30, then you're going to start looking at the 9:50 to clean up, or you're going to start looking at the 10:50 to clean up. It's just a matter of waiting for that price to clean up, give you a clear setup with a clear directional bias. That's the thing you gotta wait for. Gotta wait for that one-sidedness, and then you gotta take your trade, but you gotta be really cautious of. Gotta look at dollar. Is dollar opposing? Is dollar sitting sideways? And look at your indices and make sure that you are trading in sync with those. I just want to take a look at that ES trade that Ben Cruz took here. 55.90.25. Let me just check here on the 1 minute. Just checking on ES. 55.90.25. Let me just see here. Then I can just have a look at it on the US and see where that is. 55.90. It's almost right at the low there. 90.20. Yeah. 90.25. 1 minute inversion. Yeah, okay. You took that up into really, yeah. It was early. Yeah, 9:34. Yeah, that's a 9. Yeah, right about 9:34. Yeah, right there. I see it here. Up to the 5600. Um 50. Yeah, that's a pretty cool trade, man. Yeah. Let me just see here. So, let me just switch the screen over here. We just have a look at that. It's a pretty cool trade. US 500. So down here on the 1 minute, right here at this, that inversion right there, you took it up into 56.25. Basically took it up from down here right up into the high. Beautiful entry, beautiful trade too. Yeah. Second entry at 944. Oh yeah, right at that fair value gap. 938 fair value gap, huh? 55.99. Yeah, yeah, right at that fair value gap there. Take profit at 56.05. Beautiful, nice. Really clean setup you caught there. Nice. Yeah, those equal highs were. Oh yeah, there you go. We cleared those 1 hour equal highs right there too. Yeah, beautiful trade. Nice. Patience just goes to show that patience pays you. Just gotta wait. Gotta be patient. Sit and wait for it to clean up, and you just gotta find the entry, and you gotta execute on your plan there, and trade your model. Really, really nice. We're still sitting sideways for dollar, not doing anything. US 30 is now sitting, still trading down lower. Not ideal. But ES and NAS, we could still reach up higher. Although I think it's done right here for at least until we get into the 1011 silver bullet, silver macro. It could still push up for could still go up into this fair value gap here, this imbalance up there. Could still trade into that. Could take out the highs if it really wants to go there, it'll go up there. Nothing holding it back now either, too. We're trading into this imbalance. So the takeaway here today is 50-50 conditions. And take my word on it. 50-50 conditions. Journal that. And even if you guys take these trades from the stream, take a screenshot, post them in your journal. These are beautiful examples of why you do not take a trade in 50-50 conditions. And trust me, I've been there, I've done it. And journal it down, make a big, nice, bold description, 50-50 conditions. And once in a while, you go back into that and you open it up and you just reread why you do not, remind yourself why you do not take a trade in 50-50 market conditions there. It's low probability. Wait for it to clean up. Wait for your setup to form. Once it becomes one-sided, then you take an entry, and then you get a low resistance liquidity run. But it needs to take one side or the other side, and then you will be able to take an entry. It's all about being patient, really. It's all about being patient, waiting for that setup to come, and then going in long. You just really got to be patient. That's all you got to be. You just got to wait for it. So, with all that said and done, hopefully you have found this one insightful. Hopefully you guys have written down this in your journal. And until the next one, good luck and be safe.